Hey, my name's Dave Nicholson and welcome to my YouTube channel. This is this week's property news, and I'm trying not to say this every week, but again, so much has happened in the property world in such a short period of time. We've got to talk about the Trump tariffs. Some of that's moved forward quite considerably. We're talking about interest rates that have dropped. We're talking about EPCs and the impact that they're going to have on landlords, because that is significant and been quite a shocker this week, and much more. Now, if you're new around here and you haven't done already, make sure you subscribe to the channel over there and hit that bell notification. We've got new property content every single day on this channel. We're going to talk to you about what's happening in the property news and also investing tips and strategies as well. And let's get some views on this video. How do we do that, you ask? Simple. Smash like, tickle like, do something to that like button. That helps with the YouTube algorithm. And why not share this video with a friend or family member that wants to know more about property? You can press that share button, WhatsApp it, email or Facebook message it to them, or however you like to get it to them. So, what's going on this week? Well, another busy week in the property world. First off, I want to talk about Trump, because while you might feel that he's all the way over in America, it does have an impact on you personally, because the strategies, the trade war that he's starting, all of this stuff will impact things like trade, the economy, and interest rates. Now, I made a detailed video on the Trump tariffs and the impact. 25,000 people watched that this week. So if you want to see that, click below. You can click on the channel, then click on videos, and you'll find it in there. But in a nutshell, what's happening is Trump has this trade war. It has started now on aluminium and on steel. So that's going to impact companies that export to America. And that will in turn drive prices up and potentially keep inflation higher. Now, in America this week, the inflation data went up. They constantly talk in the American news about the cost of eggs because they've got a bird flu crisis. So they're killing lots of birds, and that means that there's scarcity of eggs, so the price is going up. But in general, inflation has risen in America, and that meant that the Federal Reserve did pause interest rate cuts. Now, the fact that since they paused, the inflation has ticked up again means that that's likely to continue for a while. And I think as more tariffs get added or threatened, even if they're not added, it does just give uncertainty for a lot of businesses, and does mean, I feel, that inflation will stick or rise a lot more in America. Now, why does that bother you? Well, it means the Federal Reserve are unlikely to cut rates anytime soon, or at least they're going to do it slower or less than we were hoping for. Now, the Bank of England follow the Fed. They will do very close to what the Fed do. So the Fed is at 4.25%. We're at 4.5%. So we can cut one more time and be fairly in line with America. But if they don't cut for the rest of the year, we'll probably be stuck where we are, or one or two cuts. So it isn't great news for us. So we've got to keep an eye on that. But other things Trump's doing could be more positive. There's the Ukraine stuff that's happening. Potentially negotiations are going to start on that. Hopefully, in my opinion, Russia doesn't get given everything, and there is some fairness in that negotiation. But if that war does end, that could bring energy costs down for everyone around the world, especially gas prices, once that got opened up and flowing again. So potentially that could be something that happens fairly short term as well. So keep an eye on that, because that will impact your property stuff. Let's talk about other stuff that's going on. So we've got major banks that are saying that they feel that the UK is going to cut rates. So regardless of what Trump does, you've got Goldman Sachs and other places saying that the Bank of England will have to cut rates to 3.5% by the end of this year, just because the British economy isn't looking great. Somehow we've avoided a recession, but things aren't looking great. So from April, minimum wage goes up, national insurance goes up, and a lot of small businesses can't afford those and are expected to have layoffs. Big companies like supermarkets have already started that process of laying off staff already. So the economy in the UK doesn't look very strong. That could mean that we cut more and could get cuts that little bit faster, even if America doesn't. So you've got to look at two arguments here. One, we're saying potentially if inflation stays high in America, rates don't go down. But we've also got to look at the balancing act of the UK economy isn't looking great. So potentially that's something that could bring down rates, but that could also bring down house prices if we get mass unemployment. What is also going on is rates. So interest rates have dropped. Mortgage rates have dropped this week, and we have got two lenders now that are under 4%, which is really good. We got Santander at 3.99%. They have fees of 1,999, £2,000 basically, but it's moving in the right direction. And the next day, Barclays cut their rates to 3.99 with fees of £899. So that makes a big difference. They nearly more than cut the fees in half. And I think that is hotting up a price war. And a lot of that is down to the fact that it is slowing. So I'll tell you that the market is busy now, and that's true. So right now, the market is busy. There are lots of transactions happening at the moment, and there are people trying to buy properties and get them complete before April the 1st when the stamp duty increases. But behind those transactions, the ones following along, the ones that are going to complete in April, May, June, those are slow. And that's because there is some uncertainty on what the stamp duty increase will have. That's definitely going to mean less first-time buyers because they're trying to cram their deals in right now, and it could slow down the market. So lenders are moving ahead of that because the deals, the applications that happen now, they're not going to complete before the stamp duty increase. We know that already. It's very unlikely that you'd apply to a new mortgage with Barclays and complete by April the 1st. Now, it takes a while. So lenders know the market is slowing down, so they're acting ahead of time. And also the swap rate that they borrow at has dropped. So that means that they can get money cheaper. So two lenders have dropped. I think you should keep an eye on Nationwide and Virgin Money. They're very, very, very competitive. And last year, very often they were cutting rates and making sure they were one of the best in the market. So keep an eye on those places. I think you'll get a few more places under 4%. The big news this week, though, is the EPC news. And I'm going to link below. There's an ebook that I'm going to put in the description here. And that is all about how to improve the EPC on the property. Hundreds of you took that already. But before we jump into the EPC stuff, it's my birthday today, and I want to quickly share something with you. And that's the fact that we've put the fundamentals of property investing on sale right now. So in the description is going to be a link where you can grab the fundamentals of property investing for £24, one-time payment, learn how to source properties below market value, how to add value to properties, how to market properties, what's the best strategy to get the most profit from that. Should you be doing a buy-to-let? Should you do it as an HMO? Or whatever is the best strategy? That will teach you all of that stuff for £24. More than 100 of you have already taken that this week, so do go and grab that below. And that is on sale until the end of the week. So that's my birthday present to you. So back to the EPC stuff. EPCs, Miliband, he had his little chat the other day about what the expectations are on EPCs. And it's way worse than we were expecting. What they're saying is that you would need as a landlord to get your EPC up to a level C or above by 2028 on new tenancies. So if your tenant leaves and you need to re-advertise it around 2028, you will have to have it at a level C. Now, if you've got a tenant that's staying in the property, you've got till 2030 in order to do that. But if they left in 2029, you would have to fix the property up to a level C on the listing of that property. Now, that's not great. And what they're also saying is We understand not every property can get to a level C, so they want you to spend £15,000 in order to do the best to get the property up to the maximum standard that you possibly can. Now, that was £10,000 when they were talking about it in November. So since November, it's gone from 2030 back to 2028, and they're saying you've got to spend 50% more money. This isn't great. Landlords that are surveyed, 75% of them are saying they're not going to do any of the work because they don't believe Labour will be in power, and they're going to take the risk on that. So most landlords aren't incentivised to do this work, or they can't afford it. So the EPC stuff is important. I'll put the ebook in the description here as well. And do go and check the more detailed video that I made on that this week. 20,000 people watched that video, so it was a really popular one this week. So all in all, a lot's happened. Trump tariffs, they're going to impact maybe inflation. We've got to keep an eye on that. 1 minute they're on with Canada and Mexico, then they're not. But the steel and aluminium tariffs happened. So that's something that did happen. We've got banks saying, look, the UK economy's horrendous, and you're going to have to cut rates to 3.5% by December. So that's something to keep an eye on. We've got lenders that are competing for our business now. 2 lenders have dropped below 4%. I think more will do the same. So keep an eye on that. And those are deals that they're hoping to get going after April. EPC stuff is the big one if you're a landlord. Do check that out. Get the guide. Go and check the more detailed video. And do comment. And make sure you grab the fundamentals of property investing while it's on sale. Smash like, check out all the other content on the channel as well, including this video right here.